Navigating the IRS, Employee Retention Credit Audits. As the IRS cracks down on employee retention credits, it's important to understand why this topic is so crucial. In today's economy, businesses are facing unprecedented challenges when it comes to retaining employees. The COVID-19 pandemic has forced many companies to make difficult decisions about staffing levels, and the IRS is now closely scrutinizing claims for employee retention credits. According to recent data, the IRS has already audited over 100,000 employee retention credit claims, resulting in millions of dollars in fines and penalties. This means that businesses need to be more vigilant than ever when it comes to compliance. By understanding the basics of employee retention credits and staying up to date on best practices for compliance, you can avoid costly mistakes and stay ahead of the game. Employee Retention Credits, ERC, is a tax credit offered by the U.S. government to incentivize employers to keep their employees on payroll during the COVID-19 pandemic. It was introduced as part of the CARES Act in March 2020 and has since been extended through December 2021. The ERC is calculated based on the wages paid to employees during the eligible period, which can vary depending on the quarter. The credit amount is up to 70% of qualified wages paid per employee, with a maximum credit of $28,000 per employee for 2021. Employers can claim this credit against their payroll taxes or request a refund if the credit exceeds their payroll tax liability. The IRS is focusing on employee retention credit audits for a few reasons. Firstly, the Employee Retention Credit was introduced as part of the CARES Act in response to the COVID-19 pandemic. As such, it is a relatively new credit, and the IRS wants to ensure that taxpayers are claiming it correctly. Secondly, the credit is quite generous, up to $5,000 per employee, so there is a potential for abuse. Finally, the IRS has identified non-compliance with the credit as a high-risk area, and they are keen to address this issue. Non-compliance with the employee retention credit can have serious consequences. For example, if an employer claims the credit but is later found to be ineligible, they will need to pay back the credit plus interest. In addition, the IRS may impose penalties for incorrect or fraudulent claims. This could result in a significant financial burden for businesses, not to mention the reputational damage that comes with being audited by the IRS. One of the most common issues with employee retention credit claims is not properly documenting eligible employees. In order to claim the credit, you must have records showing that you met the eligibility requirements for each employee claimed. This includes proof of wages paid and hours worked, as well as documentation of any qualified wages paid during a government shutdown. Another issue is claiming the credit for ineligible employees. For example, if an employee has been furloughed or laid off, they are not eligible for the credit. It's important to carefully review your employee records to ensure that you are only claiming the credit for eligible employees. Additionally, some employers may mistakenly claim the credit for wages paid to owners or their family members, which is not allowed. One of the best practices for employee retention credit compliance is to keep detailed records of all eligible employees and their wages. This will help ensure that you are claiming the correct amount of credits and can provide documentation in case of an audit. Another important practice is to regularly review and update your eligibility criteria. As the IRS continues to refine its guidance on employee retention credits, it's important to stay up to date on any changes that may affect your eligibility. In conclusion, it's clear that employee retention credits are an important topic for businesses to understand and comply with. Non-compliance can result in significant financial penalties and damage to a company's reputation. By staying ahead of the game and implementing best practices for compliance, businesses can avoid these risks and take advantage of the benefits of employee retention credits. We encourage all businesses to take steps to ensure compliance with IRS regulations, including regularly reviewing and updating their policies and procedures. By doing so, they can protect themselves from potential audits and penalties, and position themselves for success in the competitive business landscape.